President Trump saying he is now doubling the tariffs on Canadian aluminum and steel as markets reel for a second day in a row. The Dow Jones down now.
Until these tariffs are off the table, until the threat of tariffs is gone for good, Ontario will not relent.
President Trump's recent escalation of trade tensions with key economic partners, China, Canada, and Mexico, has sparked widespread concerns about the potential negative consequences for the U.S. economy.
They have billions, they want more billions, and they do not care about who they step on in order to become richer.
The imposition of increased tariffs has led to substantial declines in U.S. stock markets, forcing global investors to reconsider their confidence in American markets and explore alternatives such as Chinese equities. These developments indicate the far-reaching impact of trade policies on global economic stability. Before we dive in, don't forget to like and subscribe for more insights. A significant development in this trade conflict was President Trump's decision to impose an additional 25% tariff on Canadian steel and aluminum imports, effectively doubling the existing rate to 50%.
Trump raised those stakes this morning by announcing new tariffs on steel and aluminum that comes into the United States out of Canada. The president says those taxes could reach as high as 50% and will go into effect tomorrow.
This measure was introduced as a response to Ontario's decision to implement a 25% tariff on electricity exports to the United States. Such retaliatory tariffs highlight the deepening trade rift between the U.S. and its allies, further complicating diplomatic and economic relations. The U.S. administration has also doubled tariffs on Chinese imports, intensifying the ongoing trade war between the world's two largest economies. These tariffs affect a broad range of goods, from industrial machinery to consumer electronics, significantly increasing the cost of imported products. By escalating trade barriers, the administration aims to pressure China into revising its trade practices. The intensified trade tensions have had a profound impact on U.S. stock markets, leading to major declines across key indexes. Dow Jones Industrial Average. This prominent stock index suffered a sharp decline, shedding nearly 600 points in response to growing trade disputes. Investors reacted with concern, fearing potential long-term economic repercussions from the tariffs. S&P 500. The benchmark index recorded a 2.7% drop, reflecting widespread worries about an economic slowdown resulting from the rising cost of imports and strained international trade relations. NASDAQ Composite. The tech-heavy NASDAQ index was significantly affected, declining by 4%. This downturn underscores how tariffs impact technology companies, many of which rely on Chinese manufacturing for their supply chains. These substantial stock market declines have erased the gains made since the previous election, demonstrating the extent to which market confidence is tied to trade policy stability. The financial uncertainty created by the tariffs has led investors to adopt a more cautious approach, further destabilizing economic growth projections. As U.S. markets experience increased volatility, global investors are seeking more stable investment opportunities. This shift has resulted in a growing interest in Chinese capital markets. Equity inflows. In March alone, global investors funneled $7.2 billion into Chinese stocks, bringing the total investment in Chinese equities to $30 billion for the year. This marks a significant increase in foreign capital, moving away from U.S. markets in favor of Chinese assets. Bond market. The trend extends to China's debt instruments, which also witnessed increased investor interest. Investments in Chinese bonds reached $3 billion in March, a substantial rise from $800 million in February. The growing perception of China as a safe haven for investors is a notable shift, particularly given past concerns about the country's economic policies. This change underscores how trade disputes can have unintended consequences, such as strengthening the financial standing of a competing economy while weakening domestic markets. The continuation of high tariffs and trade restrictions poses several risks to the long-term health of the U.S. economy. These risks include corporate earnings pressure. Increased tariffs drive up production costs for companies that rely on imported raw materials and components. This, in turn, reduces profit margins and discourages businesses from expanding, hiring, or investing in innovation. Companies may be forced to cut costs in other areas, potentially leading to job losses and slowed economic growth. Consumer price inflation, higher import costs often translate to increased prices for consumers as businesses pass on their expenses. This can lead to inflation, making everyday goods more expensive and reducing the purchasing power of American households. Lower consumer spending can further slow economic expansion, as consumer activity accounts for a significant portion of U.S. GDP. Global economic slowdown. The interconnected nature of modern supply chains means that trade disputes do not remain isolated to the countries directly involved. As tariffs disrupt supply chains, production slowdowns occur worldwide, negatively impacting international trade and economic growth. If trade tensions persist, they could contribute to a global recession, further exacerbating economic instability. President Trump's trade policies, particularly the use of tariffs, have created economic challenges that extend beyond the immediate trade partners involved. The resulting declines in U.S. stock markets and the shift of investor confidence toward China illustrate the broader financial implications of these policies. Additionally, the long-term risks associated with corporate earnings pressure, inflation, and potential global economic downturns highlight the need for a reassessment of these trade strategies. Moving forward, it is crucial for policymakers to consider the broader economic effects of trade disputes. The impact of these trade tensions is undeniable, affecting markets, businesses, and everyday consumers. As the situation continues to unfold, staying informed is more important than ever. What are your thoughts on these trade policies? Do you think they will help or hurt the economy in the long run? Let us know in the comments. If you found this analysis valuable, don't forget to like, share, and subscribe for more updates on global economic trends. Stay tuned, and we'll see you in the next one.